What are some common characteristics-based ratios or multiples used when using market comparables to value a firm? So the market approach to valuing a firm depends upon identifying different characteristics about similar companies that those characteristics provide a metric by which the company can be valued. So the presence of the metric compared to the total valuation of the company is a ratio that can be used to once again take another company, identify the presence of that metric, and thus extrapolate the value of the company from that ratio. So with that being said, comparables are simply ratios or parts of a ratio that are used for valuation purposes. Now, the most common ratio is the price, and we say price rather than total valuation because usually it's divided price per share. So you're identifying the individual units of ownership interest there because once again, it's as a ratio. So you're dividing total outstanding shares by the company's total valuation out there in the market, because otherwise, if you didn't make a common unit of comparison, just simply comparing the total valuation would be more difficult, particularly when it comes down to understanding the extent to which equity out there is included in that valuation. So we look at price to earnings is a big one. Price to earnings growth, and that's basically just taking the price to earnings ratio and divide it by the growth rate, which ultimately means swapping the formula around and multiplying price by the growth rate, then dividing by earnings. And once again, this takes into account the earnings path more so than price to earnings, which simply says the current earnings path going forward. Price to cash flow, which is different than earnings because oftentimes, again, earnings relates closely to profit or total revenue, where cash flow is the actual cash received, not including things like non-liquid assets or accounts receivable or something like that. Okay, price to sales, and that's volume of sales or dollar value of sales. This excludes other line of business sources of revenue, such as sale of real estate or something else like that, that would otherwise be included in cash flow or earnings. Price to operating characteristics. This is for companies that, once again, are growing, and revenue is not the best metric for determining how much value they're creating, particularly when a company is seeking growth rather than monetization of the metric that they're using at the moment. So, for example, Facebook is sought to acquire users as quickly as possible before it started rapidly monetizing the information that it received from those users or access to those users. So revenue did not match growth for purposes of the metric, so you'd look more towards users rather than you'd look towards revenue. So anyway, users to the price per share outstanding would again be a good ratio or characteristic for that type of business. And then market to book, which is related to price to equity. Market is, once again, the total market value out there. You take the market price times the total number of shares and compare it to what is the accounting or book value recorded on the company's books. This can give a good understanding of what the market actually values this type of business at versus what it costs to start it up. So again, in certain scenarios, this is an excellent comparable for similar types of businesses in that field. So if you've got comparable businesses and you draw the valuation from transactions or market value out there, these focus again primarily on the value that the market is attributing to the shares, and these are generally more useful when there is an open market for this type of business. If it's a very novel, unique type of business, it's going to be more difficult to use these types of metrics or ratios. You're going to look more closely to deal transactions or industry multiples that typify or characterize operational characteristics of a business in that industry. So these are some common characteristics-based ratios and how they're used as part of valuation using market comparables.